and welcome to our webinar on real estate and an IRA. We're going to talk today about sort of the basics about investing in alternatives in real estate-based assets. We're going to talk a little bit about the rules and how these investment structures work within a retirement account. My name is Larissa Greene, and I'll be guiding you through this webinar. Just a little note about the webinar today. We are going to take questions throughout the webinar, so please feel free to type your questions into the chat box and we will get those answered as we go. Again, my name is Larissa Greene. I'm with Advanta IRA. I've been with the company for about 12 and a half years now. I started out sort of handling a little bit of everything, sort of went where I was needed and did a lot of things like coding checks as income for IRAs. I helped with transfers, opening accounts, and then eventually I moved over to business development, education, and I did some marketing. And I've been in this position about 10 and a half years now, so quite a while. I do a lot of networking for Advanta and sponsor real estate based seminars and different things of that nature. So if you're local to our area, then you may have seen me out and about. My contact information is here for you on the screen. So if you have any questions that you feel maybe of sort of a personal nature, or you have a specific structure in mind that we don't have time to cover in today's webinar, please feel free to reach out to me. That is my direct extension there and my email address. We're going to talk a little bit today about the rules for self-directing in an IRA, and we're going to go over different investment structures. But please keep in mind that although we touch on the rules, we do not give investment, legal, or tax advice. Anything that we share today is for informational purposes only, and we always recommend you speak with your attorney, your accountant, get your team of professionals involved when you're looking at an investment. Advanta IRA is a self-directed IRA administrator. We handle a bunch of different kinds of accounts, and we'll talk about that in just a moment. But we can help anyone really nationwide and worldwide. So if you have a US-based retirement account and you're looking at an investment that would be considered an alternative to market-based assets, it might be something we can help you with. So again, a US-based retirement account is all that it takes. And we have clients nationwide and even worldwide. We have been in business a little over 20 years, and we have almost $3 billion in assets under management. And all of our clients receive a dedicated account manager so that they always know who they're working with. So a little bit different than our competitors. When a client reaches out to Advanta, they're always reaching out to their one line of contact, whether it's to pay a bill, receive income on their investment. It might be to make a new investment or annual contribution, because we're getting to that time of year. That individual helps their client with everything, and that person is with you for the life of your account. So what is a self-directed IRA? And I always feel like it's important to start with this question, because a lot of you on this webinar today, or if you're reviewing the recording, you're not familiar necessarily with our definition of a self-directed IRA. I meet a lot of people who tell me, well, I have a self-directed IRA. I choose to invest in different stocks, bonds, mutual funds in any amounts. And that's a little bit different than the way that we look at a self-directed IRA. Our definition is more specific, and so our clients are investing in things that they choose outside of the market. Advanta has made a business decision not to hold any market-based assets, and so we are not really competing with your brokerage firm. We're just really filling the gap in the industry for those investments. So a self-directed IRA in our terms is really holding alternative investments like real estate. So today we're going to have some real estate examples and mortgages, of course, but we also see people invest in things like private placements. So putting money together as a limited partner, your IRA goes in maybe as a limited partner and makes an investment where there are general partners or basically managers of that fund making those investments for you. We also see sort of outside of the real estate space, private placements for things like funding businesses and startups, so angel investing essentially, or crowdfunding. We also see private placements for other purposes too, research and things of that nature. We see people invest in precious metals. So instead of actually investing onto the market into things that would be holding precious metals or funds, it's actually holding gold and silver bars and coins. We also see people invest in foreign currency or foreign currency exchange, futures trading, and sort of the list goes on and on. We actually do a webinar for the most unique investments that we see, and we try to do that a couple times a year and change up the investments so that we can give you an idea of more unique investment strategies that our clients are using for investment purposes. And we like to say at Advanta, invest in what you know best. And that's really what our clients are doing. They're very entrepreneurial. They see something that they're interested in, and maybe it's in, something that they have a lot of knowledge in. So, when I have a client that comes to me and says, I really want to invest in farmland, well, that's not something that I have a knowledge base in, but that might be something that they are really well versed in. And so they want their retirement to grow in that asset class as well. And we kind of already went over this, but a reason that you might not have heard of a self-directed IRA is just very simply because the IRA, the type of IRA account that we hold when we talk self-directed is something outside of the market. And brokerage firms, they've made it a business decision not to hold assets they would consider hard to value. They're not sure how to receive rental income on behalf of an IRA, or maybe even pay a mortgage payment on behalf of an IRA that holds real estate with a mortgage. And so, again, we're just filling the gap in the industry for something that the IRS has always allowed since the start of IRAs back in the 1970s. And if you haven't heard of it, it's probably just because there's not a lot of companies out there like Advanta willing to hold private investments. And you can see my note down here at the bottom. Did you know self-directed accounts only account for less than 4% of IRA investments? So that's a really unique or a very specific statistic, because when you think about all the money that is in IRAs or in retirement accounts, that is a very small percentage. And sometimes when I talk to people about even raising capital and knowing about self-directed IRAs as a tool, we talk about how IRAs tend to be one of the most liquid assets that we have, right? So if you have a lot of personal investments and IRA investments, then you know that an IRA can be liquidated very easily. You reach out, you sell the stock that you have within that account, leaving it in the IRA account, so it's not taking a distribution, and then transferring it over to a self-directed IRA in order to make that private investment that you want to make. And that tends to be a pretty simple process. Just as a reminder, if you have any questions, please feel free to type them into the chat box. So self-directed IRA plans are not limited to Roth IRAs. That's a question that I get a lot. People will ask me, well, if I don't have a Roth IRA, then I guess I can't self-direct it. Is that correct? And I'm really not sure where that comes from, but if it ends in IRA, it can be self-directed. And that includes traditional IRAs, of course. That's the most common account that we open, but that's also SEP IRAs, simple IRAs, former employer plans. And I think the reason we open a lot of traditional IRAs is just simply because when you have an old employer plan, it's typically pre-tax, not always, but typically. And once you've severed ties with that employer, you're able to move it over. And so that's typically just a rollover to a traditional IRA. Those two accounts are treated the same for tax purposes. And so we open a lot of traditional IRAs that are receiving funds from a former employer plan. And that could be a 401k, a 403b, even a thrift savings plan. And so there's a lot of options there, pensions. But we can also hold employer-based plans like SEP IRAs and simple IRAs. And if you're self-employed, one of these two options might work well for you, or something like a solo 401k where you establish a 401k for yourself and for your spouse. So it's partners, equitable partners in the business, and spouses as employees. And I had a question pop up. Do we have anybody in Tallahassee? And we are based here in the Tampa Bay area of Florida, but we do have a representative that occasionally goes to Tallahassee for actually an investor meeting. So if you want details on that, please feel free to reach out to me. Do each of the accounts have separate maintenance fees? They do, and I'm happy to go over the fees with you if you want to reach out to me. But yes, if you have multiple accounts with Advanta, they do have their own separate fees. Now, keeping in mind that IRAs can partner together. So the advantage is that you can partner your IRA and your spouse's IRA, or your IRA and your children's IRAs, in order to grow those accounts and make a single investment. And I will talk a little bit about that as well. Also up on this screen, you can see that I have health savings accounts and education savings accounts. And although these are not IRA accounts, the rules for self-directing these accounts are exactly the same. And so they can be self-directed, and we can assist you with that. And we're at a really unique time of year, really, for most of these accounts, where you can still set them up and make at least a part of your annual contribution for last year. So if it's an employer-based plan, it's going to depend on when the plan is set up for solo 401ks and simple IRAs, but SEP IRAs can still be established for the previous year and fully funded, as well as any of the others. So education savings accounts, health savings accounts, Roth IRAs, and traditionals can all still be set up for 2023 and fully funded. So you have until tax filing for most of these accounts, and then for employer-based accounts, a lot of times it's tax filing plus extensions. With the exception of the simple IRA, the simple IRA has a deadline that has already passed in order to set it up. But if you have one existing, of course, you can still make your last year's contributions. For the solo 401k, you can still set it up for last year, but your contribution is going to be limited to the employer contribution. So if you have any questions on any of those accounts, if you're looking to still set one up for last year, please feel free to reach out to me and I'll go over those specific rules for the account that you're looking at opening and contributing to. A lot of times people will say, well, if I can invest in, mortgages or real estate personally, why would I want to do it with a self-directed account? So here are some good reasons that we see people choose to self-direct. Simply a new source of capital. Many people don't know that they can use their IRAs and again, invest in what they know best. Sometimes when we talk about using an IRA as a way to raise capital, we talk about that ease of liquidity for an IRA account. Let's say that you're an investor, you're a real estate investor, and you have a private money lender that you tend to work with often, and you go to them and say, well, I have a new project, I need $25,000 to finish a rehab, and that lender says to you, I would love to invest in that project, but all of my money is out right now. If you let them know about self-directed IRAs, many times they don't know that they can tap into that source and make that investment through the retirement account, so they're not paying taxes and penalties to do so, and therefore that helps you raise capital for that investment, but it also helps the investor realize that they can put their retirement account into something that they choose to invest in and truly diversify. Sometimes we simply see stock market fatigue. People are tired or unsure of the investments. They're kind of tired of taking the stock market roller coaster, and they say, you know what, I want to be diversified. I want to look at investing in something that I can drive by, that I can see, touch, feel, something that is, where I'm sure that although, the value of real estate rises and falls, it's something that is there, it's a tangible asset. And so there's a lot of people who invest for that reason. And then of course, tax benefits. If you have especially a Roth IRA, any growth in that Roth IRA is potentially tax and penalty free when you're making those investments. And so there's a lot of advantages to a self-directed account in that way. Real estate in an IRA is not limited to purchasing rental properties. Sometimes people don't want to be involved in tenants, toilets, and termites, but there's a lot of options when you're looking at real estate. You, of course, can buy real estate, and it can be short-term or long-term rentals, but you can also lend money. So if you choose to lend money, it could be in the form of a first, second, third mortgage, whatever you see fit. It could also be unsecured, but as the IRA holder, it's going to be up to you to do your due diligence when making your investment. Make sure you feel comfortable with that investment. Sometimes people will say to me, this mortgage is in third position, but the equity in the property is, well over 50% loan to value, including the third position. So I'm comfortable with this investment. Now, remember, at the beginning, we talked about how Advanta is not going to give you a tax, legal, or investment advice. So it's going to be up to you to do your due diligence and make sure you're comfortable with the investment you're making. And if you are comfortable, then we are simply going to help you get it done in the name of the retirement account so you can start realizing those returns. We have people invest in real estate options. If you're not familiar with real estate options, I feel like that's a little more of an advanced strategy, but basically what you're doing there is you're giving somebody some consideration, so some amount of money for the option to purchase their property at some point in the future. So if I said, hey, Mr. Jones, I want to buy your property 10 years in the future. I'll give you $10,000 so that you can do the repairs to your roof, for example, or so that you can, whatever it might be, do repairs on the property, and Mr. Jones says, okay, I agree, you can buy the house in 10 years, and they agree on a purchase price. And so what I'm doing there is hopefully capturing the growth or equity in the property with my agreement with Mr. Jones. We see people invest in syndications. We talked a little bit about that at the beginning. Somehow the IRA is either subscribing to an LLC or is a limited partner in a deal where they're just bringing some of the money for that deal. There's probably many limited partners or many subscribers to this deal, and everyone puts in a certain amount of money, and from there the manager or the general partner is going to control that fund and many times make the decisions for that investment. So they might buy, let's say, an apartment complex, and maybe it needs some rehab or updating or what have you, and the limited partners are sort of along for that ride. It's a passive investment, and then when the general partner or manager decides that the property is ready for sale, or maybe their long-term plan is to cash out the limited partners and refinance the property, they will do that, and then the limited partners or subscribers will get paid back at some upside. And we do see a lot of that type of investing at Advanta as well. We also see a lot of private lending, which I mentioned, in joint ventures, so lending money with some portion of the upside instead of just interest. We see tax deeds and liens and wholesaling, and so the list really truly goes on and on of different ways to invest in real estate aside from just simply purchasing 123 Main Street, for example. I had a question pop up. Can more money be placed in the IRA than the tax deferred amounts? What I think you're asking is, can you put more than the annual contribution into an IRA account? And the answer is no. The amount of your contribution is going to depend on the type of account that you establish. So if you have a traditional IRA or a Roth IRA, you're going to be limited to the amount you're allowed to contribute to those accounts each year. Now we are at a unique time of year where if you didn't make your last year's contributions, you can still do that until April 15th, and you can also make your 2024 contribution. So if you're looking to lump fund your IRA and you haven't done last year's contribution, then this might be the opportunity for you to do that. And then of course, if you have a SEP or a simple IRA or even like a solo 401k, then you're going to be able to put more money in on an annual basis, just simply because of the nature of those accounts. And so that is something to keep in mind, because you are going to be limited each year as to how much you can put into an IRA account. And so, for example, with a traditional or Roth IRA, your annual contribution is going to be $7,000. And so you can't just say, okay, well, I'm going to put $10,000 in for 2024 because the IRS simply doesn't allow it. And IRA administrators don't allow it either. You can't write us a check and say, hey, this is my 2023 annual contribution for $10,000, because our system is not going to allow us to deposit it. And so we'll reach back out to you and say, hey, unfortunately, the annual contribution for 2023 was $6,500. It's $7,000 for this year. And you might choose to reallocate those funds and say, okay, well, I'll make a contribution for $6,500, and then I'll put the other portion of that contribution towards 2024, and that would work. And like I said, you could max out both right now from January till April 15th. Typically, you're going to be able to make both contributions. And then, of course, depending on the type of account that you have, like a SEP IRA, you can do that until tax filing plus extensions. So potentially all the way to October if you're self-employed. So moving money to a self-directed account, transfers, rollovers, and indirect rollovers. It's very easy to move money to a self-directed IRA. It is not a taxable event in most cases, and we'll talk about where that could be a taxable event in just a minute. When you're moving an IRA from an IRA to an IRA, that's a trustee to trustee transfer, and that is not taxable. There is no penalty, and it's not even reportable for IRS purposes. So when we help you request funds from an existing IRA to move it to an IRA with us, we submit a transfer form that we have you complete. The other custodian reviews it and requests a letter of acceptance that we included with the transfer form, seeing that we're going to accept the funds to an IRA that's treated the same with us. Then they're going to release the funds, and nobody does any reporting because it ends up being reported basically by value on a form called a 5498. And so when you're looking at moving money from an IRA, then we're going to let you know the first question we ask is, where is money coming over to us from? If you tell us an IRA, we have you complete a transfer form. We give you instructions on how to return that form to us, and then we submit it on your behalf. And the only thing you have to do is make sure that the amount you want to transfer is available as cash. This not a distribution, you're just cashing out of stocks, bonds, or mutual funds and making that money available in a cash position before we request cash for the transfer. The other way to move money is a rollover, or we call it a direct rollover. And what that means is that you're moving money from an employer plan, whether it's an old or current. And I just want to mention that if it is a current employer plan, you do have to check with them to make sure that you are eligible to move money. In a lot of cases, they don't allow you to. But if it's an old employer plan, you would be able to move money, and that's called a direct rollover, as long as you're not first taking a distribution. So as long as you're not first taking money out personally and putting it in your personal account, then it would be a direct rollover. And they cut a check to Advanta. Sometimes they mail it to you and then you forward it to us, or sometimes they'll mail it to us directly. But as long as you're not depositing those funds to your personal account, you're forwarding them on. That is a direct rollover. It is reported on a 1099, but that 1099 should show that the issuer agrees that it is a non-taxable event, and then Advanta records it on the same 5498, showing that the money was received and deposited. So this is not taxed or penalized. And then an indirect rollover is when you do first take a distribution, either from an IRA or an employer plan. You take possession of the funds, deposit them into your personal account, and then choose to roll them over indirectly within 60 days. And the important part here is that you do it within 60 days. It's not 2 months. I always need to mention that, because I feel like time gets away from us and we say, well, I have 2 months, but you don't, because don't forget, some months have 31 days. So if you do take a distribution and you plan on doing an indirect rollover, you want to make sure you do that within 60 days. And you can only do one of those in a 12-month period. So all around 12 months. So if you've done it before, you can't do it again for 12 months. And if you're planning on doing it now, then you have 12 months before you can do it again. And if you fail to follow these rules, it is taxable and possibly penalized if you're under age 59 and a half. So under age 59 and a half means that you have a 10% penalty and you do pay taxes if you fail to get that money into the account. I had a question pop up here. If investing in real estate upon close of contract, does the return of investment go back to the IRA, or does it go to a cash account? It does go to the IRA. Keep in mind that when you're making investments through your retirement account, these are assets of the retirement account. We're actually going to talk a little bit about prohibited transactions right now, but it would be prohibited for you to take custody of income from your IRA unless you're doing that through the proper channel of a distribution. So when you receive rental income, that needs to be deposited directly to the IRA account. Think about your stocks, bonds, and mutual funds in your IRA account for a second. I think that those are such common investments, we don't even think about what that looks like in the background. How is that working? Well, your brokerage account is making those investments on your behalf, and it's titled in the name of your IRA. And when there's growth on that stock, it's just growth in the IRA account. If there's a dividend paid, it's growth in the IRA account. You don't realize that income. It's not personal growth. And that is the same for real estate in an IRA. When you have real estate in an IRA, or maybe a private mortgage, all of that income, all of that growth is going to go back to the retirement account, and it is deposited directly to the retirement account. You cannot take possession of those funds first. That would be considered prohibited. So you want to make sure that you're following the rules for these investments. Now, that being said, the best way that I like to look at it as my IRA as my business partner. So even though the IRA is ultimately mine, it is technically not mine in the way that we would normally think. That money is being saved for retirement per IRS rules, and it comes with taxes and penalties if we don't abide by those rules. And so if my IRA is making the investment, it's purchasing 123 Main Street, then my IRA owns 123 Main Street, and I am going to make sure that my IRA pays all of the expenses and receives all of the income, and that's very important. There's Only two things you can't invest in an IRA, and that's going to be life insurance and collectibles. And then prohibited transactions are really basically limited to you having a current benefit or someone up and down your lineal tree having a current benefit. And I have a slide for that coming up. But just keeping in mind that your investments for your IRA should be investments for investment purposes. And so the IRS says you absolutely cannot transact with parents, grandparents, children, grandchildren, and spouses or business entities of those. And you cannot receive a current benefit, and neither can the individuals just mentioned or businesses just mentioned when it comes to IRA transactions. So no transactions, no servicing, no furnishing goods or services, things of that nature. Between individuals that would be considered prohibited and your IRA, and no current benefit to you. And I'll give you a few examples of that in just a second. If you want to review the IRS code, it's section 4975 on prohibited transactions. And then something that is part of the rules, but just because your IRA would incur a tax, it doesn't mean it's prohibited. It's just something that you should be aware of. So unrelated business income tax, sometimes used interchangeably with unrelated debt finance income tax, applies to an IRA two specific times within two specific structures. The first one, unrelated business income tax, is incurred by the IRA when your IRA receives business income in return. So if you invest, let's say, if you purchase private stock, let's say in a local restaurant, you're typically going to be receiving dividends back to your IRA. But let's say your IRA is a silent partner in a restaurant instead, and you have business income being returned to your IRA. Although I can't clearly define it for you because I'm not an accountant, that would be the time to get your accountant involved and understand if unrelated business income tax is going to apply. Again, it doesn't make this investment prohibited, but it does mean that your IRA will have to file an additional tax form and pay the tax. And again, it's a tax burden to the IRA, not to you. So you want to make sure that you understand how unrelated business income tax works in this scenario. Another time that unrelated business income taxes occurred is when there's unrelated debt financed income. And what that means is if you purchase real estate and you use financing to do so, it is possible, but the IRA is exposed to a tax, again, unrelated business income tax. And that tax in this scenario is going to be on the income related to the debt. So if you borrow 50%, then 50% of the income is going to be taxable at trust tax rates. However, the IRA will get to take deductions and ultimately file an additional tax form, a 990T, in order to pay that tax every year. I had a few questions pop up here. If my husband and I partner to form an LLC in real estate, do we need to pay double fees for both IRA accounts each year? The answer is yes. Keep in mind that IRA accounts all have their own separate maintenance fees. And so if you're both using an IRA, then you're both going to have separate accounting fees. I just had a question pop up about getting the recording. Yes, because you're here and you registered, you will receive a copy of the recording to the webinar, and that will go out usually at the end of today or early tomorrow, and it will also be on YouTube and in our video library, so please feel free to review and share. I had another question pop up on an employer plan. Do I need to set up 2 self-directed IRA accounts if my employer plan has both Roth and traditional funds? And the answer is yes. The IRA funds have to be held separately per IRS rules. And so if you have an old 401k and you have, let's say, for example, your employer contribution was pre-tax and your contribution was after tax, then you would need a Roth and a traditional to accept funds from that rollover. I had another question pop up. Does coins include digital coins like cryptocurrency? So when you're looking at prohibited investments, which is what I think you're referring to, but you can correct me if I'm wrong, cryptocurrency would be an investment that's allowed within an IRA. When we're talking here about coins, we're really talking about something that would be considered rare or collectible, because you can't even invest in gold and silver bars and coins, but their value has to be based on what the metal is trading at and not based on the fact that they might be rare or antique. And so rare antique coins would be considered prohibited, but cryptocurrency and gold and silver coins would be allowed, again, just based on if they're considered just based on the metal value instead of being rare. Can spouses be on an IRA together? The answer to that is no, and that's not an Advanta rule, that's an IRS rule. IRA stands for Individual Retirement Arrangement, and so the IRS requires that IRAs are held in a single person's name. And so if you have an IRA and you're like, I think we're both on it, typically that is because you are both considered, you know, maybe you're your spouse's beneficiary, for example, or you're considered an interested party, meaning you can discuss that account without your spouse available, but the IRA itself is going to be in a single person's name. And that's really the same for any plan, even like a 401k. If you have a solo 401k, although you're like, well, it's both of our plans, well, then you each are a participant in the plan and your accounting is held separately. So that's a great question, though. Thanks for asking it. I think I answered this question, but just very quickly, can a spouse transfer an old employer IRA to a new IRA and include the spouse? And again, IRAs are held in a single person's name, and you can't transfer custody of it. So it's if it's in my name, if my 401k is in my name, then it's going to go to an IRA in my name. I can't give it to my spouse. And then, of course, the only exception that you would see there is, of course, if you inherit or if there's a court order for a divorce or something like that. Somebody asked about fees. Again, if you would reach out to me to go over the fees, I'm happy to answer those for you. There's a lot of different ways to make the fees work because we have many options on those. So please reach out to me regarding the fees. So here's that chart that I promised you here with disqualified persons. So you can see the IRA holder here in red is still a disqualified person from transacting with their IRA account. That means if my IRA owns 123 Main Street and I want to get 123 Main Street out of the IRA, I cannot sell myself the property. I can't lend myself money from my IRA. I can't lend money to my spouse or my children or parents or grandparents. I can't lend money to their spouses or their businesses. That is all considered prohibited. And so remember when we talked about rent, we talked about how rental income must be received by the IRA, and that would be considered prohibited for you to take custody of IRA funds in the form of rent or a mortgage payment or whatever you're looking at. But if you do want to take a distribution, then the proper channel would be to have IRA income go back to the IRA directly. Once that money is deposited, you can take a distribution of that money by filling out a form requesting the money come to you. And then Advanta will do the proper reporting for that distribution, which is required by the IRS. And if it's a pre-tax account and you're over 59.5, then it's just considered simply taxable as ordinary income. If you're under 59.5, there's a 10% penalty and ordinary income tax. If it's a Roth IRA and it's qualified, it would be tax-free. And then if it's non-qualified, then there's taxes and potential penalties that go along with that. I had a question, if I own property outright, can I place that into my IRA? No, that would be considered transacting, and there isn't a way to put a personally owned property into an IRA account. Remember, we talked about contribution limits, and contributions are limited to cash contributions essentially to an IRA based on the annual limit for that IRA account. So specifically, again, like a traditional IRA would be $7,000 this year. You are limited to putting $7,000 into the account. You can't contribute tangible assets into an IRA account. That would be considered prohibited. And you can't sell yourself that property or anything like that. That would be considered prohibited. So what I usually like to say is new to you and new to the IRA. So investments new to you and your family and new to the IRA. So prohibited transactions, IRA purchasing a piece of real estate from your son or daughter, that would be considered prohibited. Your IRA owns real estate and leases it out to your daughter, again, prohibited. Your father's IRA lends money to you or your son. Remember, picture that chart up and down your lineal tree. Really the way that I kind of think about it is if it is not an investment for investment purposes, then it's probably something you will not be able to do. So if my father was going to lend money to me or my son, if you think about it, is that truly an investment, or is that a way to help out a family member? I mean, you might be charging an interest rate, but what are your intentions there ultimately? If I couldn't pay or my son couldn't pay, would my father foreclose or demand payment or treat us like any other borrower? Probably not. And so the IRS strictly prohibits it. Your IRA purchases real estate and hires your son or his company to perform the rehab work. Again, furnishing goods and services would be considered prohibited. And so if you have your son's company is a construction company, let's say, even if he's not out there swinging the hammer, it is still a prohibited transaction. Your IRA makes the down payment for a property and you personally guarantee the mortgage. You cannot personally guarantee a mortgage on behalf of your IRA or extend your personal credit. Spouse's IRA owns a piece of real estate and wants to sell your IRA or a portion of that property, could have partnered at the outset. Excuse me. Let me read that again. Spouse's IRA owns a piece of real estate and wants to sell your IRA a portion of that property. That would be prohibited. Once you make that investment, it's you can't transact with anybody that would be considered prohibited or their IRA account. And so when you're looking at partnering with somebody who is considered prohibited, like your spouse, you need to do that at the outset. This investment should be new to you and new to them before making it. And if you do that before the purchase is done, then you can partner. But in this scenario where the spouse's IRA already owns a piece of real estate, it is too late to sell the other spouse a portion of that asset. I had a question pop up. What about siblings? Are they prohibited? Good catch. Thanks for asking. Brothers, sisters, aunts, uncles, cousins, those individuals are not expressly prohibited from dealing with your IRA account. And so usually what we see here, and remember that sneaky rule about no current benefit, you want to make sure that this investment, again, is an investment for investment purposes. So if you're dealing with your brother, for example, you're lending him money, is it because he's a rehabber, he remodels homes for a living, he has a good deal, he's paying you 12%, 10% like everybody else, and there's an agreement between you that maybe he'll do a deed in lieu of foreclosure if he can't pay or what have you, then that might be okay. But let's say you're lending money to your brother because he doesn't have the money to buy a house, and it's either you help him buy a house or he lives with you. There might be some current benefit to you from making this investment, and that could be a problem down the line with the IRS. And so again, investments for investment purposes. And if you have questions on that, we're happy to talk to you about it. But ultimately, we would recommend talking to an attorney or an accountant that feels comfortable advising you on that transaction. I had a question pop up here. Is there a limit, minimum or maximum on how much you can pull out of your self-directed IRA using distributions, both one-time and total? There is no distribution cap or minimum. Your retirement account is at your discretion until, if you have a pre-tax account, you reach required minimum distribution age. Depending on when you turn 72 or 73, one of those two is going to be your current required minimum distribution age, and that is being pushed back in the next several years. But at some point, if you have a pre-tax IRA, you are going to be required to take distributions. If you're under that age, but over age 59 and a half, then you can take distributions at your discretion. So if you say, well, I need an annual income, I'm going to have it taken out monthly, then you certainly can do that. If you have a Roth IRA, there's no required minimum distribution ever. So it just depends on the type of account that you hold. Great questions, guys. Keep them coming. So now we're going to talk about real estate assets, and we did talk about the different types of real estate. So of course, short-term and long-term rentals, they could be single-family homes, they could be mobile homes, mobile home parks, condos, and townhomes, and the list goes on and on. You can invest in real estate investment trusts or REITs, syndications and private placements, option contracts, tax liens. There's a lot of options available to get involved in real estate investments. When you're buying real estate in an IRA, you can do it directly through the IRA. You can also do it through an LLC. You can also do it through a trust or a land trust, so a personal property trust or a land trust. We're going to leave that up to you, and we do have webinars on those options, so you can certainly check those out. But today we're going to talk about buying directly through the IRA. And so property is purchased in the name of the IRA, Advanta IRA for benefit of John Smith, IRA number 1234. All funds for the purchase come from the IRA, so that includes closing costs, everything from contract to close, earnest money. All of the expenses come directly from the IRA account. And then from there, any income is going to be received by the IRA account. Purchases can be made with partners, including yourself and others. They can be IRA partners, they can be non-IRA partners. And again, I have a webinar on partnering with non-IRA funds. If you're interested in that, let me know. All of the income, rent, sale, equity, etc., go back to the IRA tax-free. And what we mean here is, because I know some accounts are pre-tax, but when the property is sold, when the rental income is coming in, it's going to go back to the IRA in most cases without paying tax. Now, there are exceptions. Remember, unrelated business income tax and when it might apply, business income and debt financing income. But for the most part, it is going to go back tax-free, and you're going to be ready to make your next investment. When you're paying bills, they're paid by the IRA account. So you submit a copy of the invoice, you go onto your online client portal, request a bill pay, or you can do that through a property manager. So if you're not overseeing it directly, if you're hiring somebody to do so, then your property manager would be responsible for collecting the rents and paying the bills, and then they would send any proceeds back to Advanta. So I had a question pop up. What if an investment company declares bankruptcy? How is this handled? So this is a time that you would get your attorney involved. And, you know, we have seen attorneys that are very knowledgeable in this. And so if you have questions specifically, I might be able to refer you to an attorney, but I am not able to answer that question. I'm sorry. I had another question pop up. If you're buying real estate in an IRA and you need to pay the property in full, or can you use a down payment? And you can use a down payment. It is possible to get financing. Most of the time, it's more likely that we see people partner IRAs together. So spouses partnering IRAs, friends partnering IRAs, family members partnering IRAs to purchase the property, but you certainly can get financing. You cannot extend your personal credit or give a personal guarantee for that loan. So it's going to be considered a non-recourse loan, and it's going to expose the IRA to that tax, unrelated business income tax, but it is possible. If you just search IRA lender, you're going to see some institutions that actually have made it their business to lend to IRAs in this non-recourse structure. But just keeping in mind that you're not giving a personal guarantee or extending your personal credit for this loan. Can you combine several small IRAs into one? I think your question pertains to an individual's small IRAs. Yes, as long as they're treated the same for tax purposes. So if you have an old small 401k and a traditional IRA over someplace else, and you have another small 401k and you're like, hey, I need to get all of these combined, as long as all of that money is pre-tax, you can definitely do that. It would go into one account at Advanta. Now, if one of those happens to be Roth, then the Roth account has to be held separately. Can you pay Advanta's fees outside of the IRA? You sure can. You can pay with IRA funds, or you can pay outside of the IRA. We leave that up to you, and you can change that option whenever you see fit. So repairs and maintenance, who can't do the work? Remember those prohibited transactions and disqualified persons. All of those people are going to be considered prohibited from doing any repairs on the property. Who can do the work? Well, that's up to you as the IRA holder. You can hire the vendors at your discretion. Just make sure your IRA is always paying that expense directly. You can't pay it and then have the IRA reimburse you. That would be prohibited. So the IRA paying the vendor directly is very important. And so you want to make sure that when you're dealing with vendors, you reach out to Advanta and find out how bill pay works so that you can get that done correctly and properly the first time around. So who rents out the property? The IRA owner selects and qualifies or deals with the property management company. Advanta IRA signs all leases and receives all the rent. The IRA negotiates all the terms of the lease, so meaning the IRA holder and the IRA owner is named contact for any issues for the tenant. And if you don't want to deal with tenants, toilets, and termites, but you do want real estate in your IRA, you can always hire property management to handle these issues. And we do not require that you use anyone specific for property management. So you would talk to the property management company and let us know who you're going to be using, and then we work with them as well. So we're going to go into some case studies now to hopefully really illustrate to you how this is going to work. And in this first case study, we're going to use a very common example of an investment at Advanta. So John has a 401k from a previous employer and he wants to purchase a rental property. So who does what? What is John responsible for? What is Advanta going to be responsible for? And here is the answers. So John opens and funds an IRA account, finds an investment property, and so he's going to start with his application. He's going to let us know it's coming from an old employer, so we're going to have him fill out a rollover form. But because it's an old employer plan, they will not speak to us. We can't request the funds for John. So he's going to reach out to them and say, hey, I opened an IRA with Advanta. Here's my account number. Here's how the check should be made payable, Advanta IRA for benefit of John's IRA number 1234. And then they're going to send the check. Remember from the beginning, we talked about how sometimes the check will go to John and sometimes it will come to Advanta. If John receives it, he simply forwards it on to us. It should be made payable to the IRA, so there should be no need to endorse it. John finds the investment property and makes us aware that he is working on a contract with his real estate agent or professional or his attorney, whoever it might be. And then we're going to give him the proper titling for that contract. John is going to sign the contract read and approved, but Advanta is the official or legal signer for his IRA. He makes the offer, we'll submit it on his behalf. And then once the offer is accepted, we have him complete a few more forms giving us permission to make this investment. And we work with his closing agent, his title agent or his title attorney to make sure that everything gets done on time and we close. It's usually a remote closing. And we sign all purchase documents on behalf of the IRA. Advanta holds the deeds and copies of all documents, and we receive the income and pay the expenses for John. The property is rented at $1,200 for 2 years, and John's ready to sell. Again, this is a self-directed IRA, so John is going to indicate to us that he's ready to sell, hire the proper professionals through the IRA in order to sell the property. So if he wants to employ a real estate agent, he is going to make sure that the real estate agent knows that all proceeds will go to Advanta, including any title or closing attorney that will be involved. Once it closes, money goes back to the IRA, and that includes 100% of the proceeds, because remember, John's IRA owns 100% of this property, and so John is not entitled to any of the proceeds. Not only does the rental income go back to the IRA, but all of the profit, all of the original principal invested, it's all going to go back to the IRA account. No taxes are paid, so $78,000 in profit is realized, and now John has $198,000 to invest in his next investment. And he can do that today, tomorrow, 2 weeks from now, a month from now, a year from now. It's completely up to John. It's at his discretion. I had a couple of questions pop up. What is the rule for an IRA owner that is a real estate broker and commissions are paid upon purchase of a property by the IRA? So I would strongly recommend that you talk to an attorney if you have a question of this nature, but I feel like that could be considered a current benefit from your IRA account. And, you know, maybe some people don't. I mean, I think that the best option for you would probably be to get some legal advice as to whether or not that would be considered a current benefit for that investment. Is there a maximum amount that can be rolled over from an old 401k account to a self-directed IRA? That is going to be up to the 401k. I think sometimes if you're no longer a part of that business and you've severed ties with the employer and that old employer plan is just sitting, they might require you to move the whole thing. I don't know if they would say, okay, yeah, you can just move a portion of it. But Advanta on our end as a receiving custodian, it doesn't matter to us. If you said, hey, I'm just going to roll over 10,000, if your old employer plan will allow you to just move 10,000, then we would accept it that way. So, you know, we're easy when it comes to that, but you do want to check with the employer plan to see what they will allow. A question popped up about a 1031 exchange. Can I sell property as a 1031 and put funds into the IRA? The answer is no. You're going to be limited again to the amount you can contribute on an annual basis to an IRA. So you do have to have earned income to make those contributions, and you have to have enough earned income to make the contribution maximum if that's what you plan on doing. So if you only have mostly passive income and you have a limited amount of earned income, the annual limit this year for a traditional IRA is $7,000. So you have to have at least $7,000 in earned income in order to contribute that amount. And even if you have $1 million in earned income, you can only contribute $7,000. I had another question pop up. Does your case study assume no expenses? So let's go back here. So the case study does not assume no expenses. If you see here on the slide, we talk about it receives all of the income and pays all of the expenses. And remember, that's important. Expenses are paid by the IRA. And so when somebody comes to us and says, hey, I have $250,000 in an IRA and I'm going to buy a property, closing costs included, it's going to be $250,000. Then we would say, hey, make sure that there's no current expenses. Is this a turnkey property? Can you make an annual contribution if you need to, should an expense arise? You know, keeping in mind that the IRA will be responsible for all of the expenses associated with this investment. So you have to log into your client portal and pay expenses with any cash available in this account. And you can always transfer between IRAs as often and whenever you like. So if you just move over enough to make the purchase or the investment and an expense pops up, you can always move money over as long as you have access to more money in a retirement account. You can always make an annual contribution as long as you're eligible. And so those are things you want to consider before making a purchase. And just to reiterate, expenses are not paid outside of the IRA account. That would be considered prohibited. I had a few more questions pop up. Back to the rollover question, is the limit Advanta will accept? Is there a limit to what the, not in the form of a rollover. There's no limit to what Advanta will accept in the form of a rollover. So if you have an old employer plan with $1 million in it and you want to roll it over to an IRA, that's at your discretion. So an IRA rollover means that money is coming from an existing retirement account. This is not the same as a contribution. So if you have an IRA account that's an old employer plan, it is still considered a retirement account and it can go into another retirement account. But you can't take money out of your pocket and simply place it into an IRA at any amount. But a rollover is unlimited. Transfers and rollovers between retirement accounts are unlimited. Do we offer any options with market-based assets, CDs, or money market accounts? And the answer is no. When money comes over to Advanta, it's available as cash. It doesn't have any growth, but it doesn't lose anything. And it's going to be up to you to put that money to work so that you can realize growth in that account. Can properties be purchased overseas? And what are the IRS tax implications? Property can be purchased overseas. My partner and I, Corey Deharsh, will be talking about investing without borders at the end of March, actually, where we talk about investing outside of the U.S. We do have clients that invest outside of the U.S. And then tax implications. This is where I would get your accountant involved to make sure you understand anything that might be involved here. I'm not an accountant, so I don't have a question for that. I apologize, but getting your accountant involved is a good insurance policy to make sure you're handling everything correctly as far as when you're making foreign investments. So now we're going to talk about a first mortgage. And in this way, Paul is going to get involved in real estate without actually owning real estate. So he has $120,000 in IRA, and he meets a private mortgage broker who can place his IRA funds in the form of a first mortgage. So he agrees to that type of investment. So remember, it doesn't have to be a first, it can be a second, a third, it can be unsecured, but Paul is most comfortable with a first mortgage in his IRA account. Paul vets the property and the borrower agrees to the loan amount of $120,000 at an interest rate of 8%. It's a 5-year balloon with monthly payments at $800, and it's secured by a first mortgage on the property. So something important to keep in mind here is that he's vetting the property and the borrower before making the investment. So he's confident that his borrower is going to pay, but should the borrower not pay, then he feels like the property he could foreclose and recoup some of his investment or all of it if the borrower does not hold up his end of the bargain. So if there's an issue with the borrower, Paul is confident that his money will be returned based on the value of that asset. And again, we don't give investment advice, so this is a good time again to employ an attorney and an accountant who can help you understand the investment that you're making. So Paul is going to open and fund an IRA account. He found the loan and analyzed the terms. He makes an offer to lend at his own terms, and Advanta will work with him to make sure that the closing happens. So we have Paul complete a form that gives us permission to make the investment and gives us all the details of the loan. He sends over the note and mortgage or deed of trust. And again, we don't prepare any legal documents, so he's going to either work with the mortgage broker for that or his own attorney. Once the loan documents come over, we make sure the IRA is properly titled in the name of the retirement account. Advanta is going to review everything for that proper titling. So the IRA is the lender, not Paul. We get Paul to approve everything. He reviews it carefully, makes sure that all the terms listed in the note and the mortgage are what he agreed upon. And then he's going to wire, he's going to give us permission to wire the funds to the closing agent, and the mortgage is recorded with the note, or the mortgage is recorded without the note up to Paul, and then returned to Advanta IRA, and the investment is complete. After closing, the borrower sends monthly interest-only payments to Advanta, and the payments are deposited. Paul is going to receive emails when money is deposited to his account, and he can also go online and track his statements. 3 years later, the borrower decides to sell the house, and Paul's IRA will receive $120,000. Remember, it was an interest-only loan. His IRA made $28,800 in interest over the life of that loan, and once money goes back to the IRA, he's ready to make another investment. And that is it for our webinar today, but I want to encourage everybody to check out events, and I'll give you a few more minutes to type any questions you have in the chat box. But remember that we have events, webinars, and networking events going on all the time. We have webinars twice a week, and we have our own networking event on Zoom called Pitch, Promote, and Prosper. That is the last Friday of every month. So we did that last Friday, where everybody has an opportunity to talk about what they have or what they're looking for. So we invite everybody to join. We have a video library where all of our webinars are archived. This one will be there as well. And we have our blog where we're talking about not just self-directed IRAs, but retirement accounts in general and industry-related news. And so we invite everybody to join us for any of our events that are ongoing. And although you do get the recordings when you register, so if you can't make it, that's a great way to register for topics that you're interested in. It's always awesome to join live where you can ask questions. But if you guys don't have an opportunity to join something live, please make sure to go back and review the recording, and then you can always message the host with any questions that you have, and I would encourage you to do so. I had a few questions pop up. Can you purchase commercial property and lease back the property as a part of a partnership? You can buy commercial property and you can lease the property out, but you cannot lease it to one of those disqualified persons. And so if there's a current benefit to you, remember that term, current benefit to you, for making this investment, then it would be prohibited. But on the surface, purchasing commercial property and leasing it out is fine. But if you're leasing it back as a part of a partnership and you're involved with some current benefit, or some disqualified person is involved with some current benefit, then it would be prohibited. What if you use IRA funds as a down payment and have other financing for the balance? That would be fine. But remembering that the financing, whether it's seller financing, private money, or institutional, has to be non-recourse. You cannot sign a personal guarantee or extend your personal credit for that loan. It is still property of the IRA. So if the IRA makes the down payment, then this is still a property owned by the IRA. That means the IRA has to pay the mortgage along with all other expenses through IRA funds. So keep that in mind, and it does expose the IRA to that tax, unrelated business income tax. Can we move money from Advanta IRA to Fidelity kind of trusts? I'm not sure of your question there, but remember IRAs can be transferred as often and whenever you like. And so if you move money over for an investment, and let's say income from that investment starts coming in and it's just sitting in cash, if you want to move it back to your brokerage firm, you can do that. So we'll hold the self-directed asset and any cash can go back to your brokerage firm if you choose to do that. I had a question pop up. On my contact information. Yes, let me go back to the slide here for you. Okay, there's my contact information if you want to reach out to me. We don't have any type of stocks, bonds, mutual funds, money market account offers through Advanta. We are strictly a self-directed firm. And so when money comes over to us, you do have to put it to work in order to realize income. And so it's going to sit in a cash position until you're ready to put it to work. For rental property, is it okay for me to manage as long as I don't get paid, but I can't do any maintenance? And the answer is you're okay to oversee the property, and this is sort of where we get into a gray area. And so you're okay to oversee the property, but at the time that you feel like you might be doing too much work, then that might be time to hire a property manager. So for example, you can't take possession of the rental income, so you don't want your tenants writing checks to you. They can be written to Advanta. Now you can have them mail those checks to your PO box so that you can check off that it was received on whatever date, but you would forward that check then to Advanta. Don't take possession of that check by depositing it into your account. Even if you're a property management company by trade, do not deposit it into your business account. Have your tenants make checks payable directly to Advanta IRA for benefit of your account and forward those checks on. You can call vendors and hire them for work, but again, at the point that you feel like you're doing too much work, then that is the time to engage property management or maybe even an attorney. So for example, if you had a mortgage in your IRA account and you had to foreclose, then that might be time to engage an attorney, because the foreclosure proceedings might be considered furnishing services to your IRA, and that might be prohibited. And there's going to be a lot of might be in the answers to these questions, because in some cases we don't know, and in other cases there is case law that says, hey, you can't do this, and it was demonstrated as prohibited. But a lot of times you're looking at a gray area, and so that's a good time to talk to your accountant or your attorney to make sure you understand what the rules look like and what those gray areas might be. I had another question pop up about networking. And so I would encourage everybody to join us for our networking event. It's the last Friday of every month. You can go to advantaira.com/events and take a look at Pitch, Promote, and Prosper. It is already posted, so you can register. You do have to register in order to receive the link to join, and so I would encourage everybody to do so, even if you're not looking for anything, even if you don't have anything to share. You can always listen in and kind of get a feel for the vibe of the room and learn what other people are investing in. And we always do a topic of discussion. So I think it's a good way to educate yourself as well. Thank you everybody again for joining. And with that, we're going to conclude the webinar, but please, if you have any questions, feel free to reach out to me.